All right. Hello, everyone, and welcome to our latest ALTA Insights webinar. I'm Jeremy Yohe, ALTA's Vice President of Communications, and thank you for joining us today as we learn more about land banks and the role you all play in facilitating the transfer of these properties. You'll notice if you've been on our webinars before, I'm not my usual remote doing some strategic planning for next year. And you'll also see our speaker. He has taken time away. He's on vacation up in Michigan with his family, but dedicated to talk about land banks and insurable title. I always have some housekeeping items to go over real quick. A copy of today's presentation can be downloaded from the handout section in the GoToWebinar window pane. Today's webinar is being recorded. You'll get an email tomorrow with a link to the recording, as well as a link to get the handout if you don't get it today. If anytime you have a question, submit them in the questions box. We'll hold some time for Q&A at the presentation. And also importantly, today's webinar is offering CE/CLE credits for many states. Credits only available for those attending today's live presentation. And I have to tell you, our platform tracks attendance. So to meet state compliance, we'll have some poll questions, two of them during the webinar to make sure you're paying attention. So as Hall & Oates saying, private eyes are watching you. Toward the end of the presentation, I'll post a link in the chat box so you can provide the information needed for us to report your credits. I need to thank Close Simple for sponsoring today's webinar. And before I introduce today's speaker, I have a short message from Close Simple.
Introducing Close Simple, the one-stop solution for simplified closings. With Close Simple, title and escrow companies can automate communication effortlessly, keeping real estate agents, buyers, sellers, and lenders updated every step of the way. Utilizing the secure portal, they can seamlessly share documents while notifying customers to complete tasks, all on one secure platform. And rest assured, with Close Simple's suite of fraud prevention tools, every aspect of your closing process is protected. Plus, Close Simple is fully integrated with popular title production software, so your team can do more with less work.
Our team can't get enough. Our employees, our consumers can't get enough of Close Simple and the tools it has. Our goal is to do a beginning to end of the whole entire transaction. With that, it's really nice that we're able to attach documents, send them securely, whatever they need, and it's all there at the click of a button. So sky's the limit, I feel like.
All right. Well, thank you, Close Simple. I will keep my fingers crossed that you all could hear that because, again, I have a different setup today and it started playing out of my other auxiliary monitor. So, all right. Well, thank you for that. And let me introduce today's speaker. Joining us today, we have Matt Kreis. Matt is General Counsel for the Center of Community Progress, which is a nonprofit dedicated to helping communities tackle property vacancy, abandonment, and deterioration. Matt is a leading voice on national issues touching housing and building code enforcement, delinquent property tax enforcement, land reuse, and land banking, as well as real estate law. He has worked closely with communities in many states to develop more equitable and effective approaches to code enforcement and land banking. He has helped to draft and advise key partners in the creation of state land bank laws and to improve delinquent property tax and code lien enforcement in states, in many states, including Illinois, Alabama, Texas, Minnesota, and Michigan. And also last year, Matt's association worked with local partners, including title companies in Missouri, to draft statutes with the goal of creating foreclosure processes that were more likely to produce insurable title. So with that, Matt, I will turn the presentation over to you.
Great, Jeremy, thank you so much. I really appreciate it, and I welcome the opportunity to be here and speak with you all today. Thanks for taking time out of your summer schedule. I know it's not always easy to find the time. As Jeremy said, I am up in northern Michigan with my family right now, so enjoying some time, but really excited to be able to step away for just a quick moment. Got a little quiet time to prep, And now I'm excited to talk to all of you about land banks, insurable title, and really actually property tax foreclosure as well, which is a key piece of all of this. So thank you again, Jeremy, for the introduction, and to the whole team over at Alta. It's been great to sort of be able to get this going. If you see me moving around a little bit, working with one screen, I'm used to two, so I apologize in advance. I'm sure you all know what I'm talking about. So, but just to kind of get things started, Jeremy, if you go ahead and get started on the next slide there. We're really going to start the conversation out and center it around vacant and abandoned. And we also use the word deteriorated properties, right? Just because a property is vacant and sitting there doesn't necessarily mean that it's not very helpful, right? Or that it doesn't have a purpose, or it isn't doing that for a reason. We're really interested in those properties that are causing harm, right, in a number of different ways to the communities in which they sit. Now, I'm willing to bet that all of you can think of, in your head, you close your eyes, you can think of at least 3 to 5 to 10 of those properties in your own community that really just give you headaches all the time, right? And what do? They depress our property values, right, of the properties next door, the folks trying to live there. They have severe negative impacts on health and safety. They lower municipal revenues. In most cases, these places are costing significant amount of money in order to take care of the problems that arise, and they increase the types of expenses. So they're costing a lot of money, and they decrease tax revenue, all of those other kinds of things that we need to have healthy, stable, thriving communities for everybody to succeed. So it's just an example. Toledo, Ohio in 2016 spent $3.8 million on services, and that's just a conservative estimate, on services related to vacant and abandoned and deteriorated properties, including over $1 million on code enforcement for those types of properties, $800,000 on nuisance abatement, $600,000 on police dispatches to these calls, and $1.4 million on fire dispatch calls and things like that. So it is a real problem. And what's a bigger problem about it? Jeremy, if you go to the next slide, right? What keeps it stuck, right? It is this fractured or tangled title that sits there, right? It's really problematic. It sits there and it's stuck because we've got a whole bunch of different owners maybe, or lien holders or things like that keep it from getting stuck. The cost of repairs may be incredibly tricky to try to figure out. The market values, right? This looks very different in a community where the average or the median home sales price is $100,000 versus a community where the average home sales price is $300,000 or $400,000, as that number obviously keeps climbing up much higher. But one of the big things that we've recognized at the Center for Community Progress is that these properties are so often underwater, or at least underwater to the point where it doesn't make sense to invest. So you can have, even though it's vacant and abandoned, at some point somebody may be interested in it, $20,000, but if you have back taxes in particular, or mortgage liens or other liens in excess of all of those dollars, or that make investing any money into it very tricky, that's going to be a real problem. And what we have found, right, is that quite normally, what we see is that these properties that are just sitting there are also sitting there, and even if you were to go buy it, right, in an open market transaction, because of all the problems, in many cases, they're not insurable, right? They're really hard to get clear title on. And we're going to talk about that in just a second, but there are all of these factors that keep these properties stuck. One of the things that we found in our work, as we talk about those properties that are sort of underwater, is that we need good tools to be able to get these properties. Now, there is no single tool that is going to address all of those issues with the title, the cost of repairs, fix the market, and pull that property out of underwater. But we can fix some of the big ones that really help to keep it stuck. And in particular, we can take a look at what those public costs are, and we can take a look at what those taxes are. So Jeremy, if you could go to the next slide. Now, I told you that we were going to be talking about land banks today, and we are, and I promise we will. But I want to do a primer first, because one of the key functions of a land bank, which is a separate quasi-governmental entity that can take title to these vacant and abandoned properties in many cases, right? But one of the key inventories that they deal with are properties that have delinquent taxes or are tax foreclosed, right? And so what we look at land banks as is a way of sort of working in conjunction with these systems, delinquent property tax enforcement systems, for example, to be able to serve as an end user for those properties that go through the system. But we've got to get the system right to do this in the right way, right? So delinquent property tax enforcement systems can be a big part of the problem. Properties can sort of linger in this, what we call legal limbo, right? They get offered for sale and nobody buys them, and then they sit there and nobody really knows exactly what's going to happen. Or in certain states, they may get offered, like Mississippi, they may be offered or struck off to the state and sit in the state foreclosed lands inventory, right? So there's a whole lot of issues where these properties go through tax foreclosure. It's really hard to find the right owners, things like that, right? Part of the problem with these tax foreclosure properties that go through these tax foreclosure systems is it may make it through the system, but the laws and the practices don't require constitutionally adequate notice, right? Which is a key aspect, obviously, of being able to for a title insurer to feel comfortable issuing a title insurance policy. And we look at these properties and maybe it's the practice in general. Maybe there's some familiarity with what's happening, or there's a lack of capacity at the county or wherever. And there's a worry that maybe the law is sufficient, but the capacity to actually do the type of notice that meets those constitutional standards of notice are really, really important. All right. So if you go through the title insurance, if you go through the delinquent tax enforcement process and all of those problems exist, there might be a need for a costly, quiet title action then to obtain clear title to tax foreclosed properties, right? And that really limits the market or the universe of potential buyers or users or developers who might be able to acquire those properties. It takes time, it takes money, it takes planning, all of those kinds of things, right? So we've done a little bit of research on some of these issues, right? Like what would a well-designed tax foreclosure system actually look like, right? And what are the real problems that folks are having with title insurance and other issues? So what we have found is that whether a local partner can obtain title insurance on some of these properties depends on more or less three factors. Whether the jurisdiction's delinquent tax enforcement system actually meets those constitutional standards, it requires notice to all interested parties. Two, whether and how the title insurance industry in that state is structured and operates within that state. And three, all the various local practice and relationships. And so local partners like land banks who own title to tax foreclosed properties, or people that are looking to acquire properties through the tax foreclosure process, right, have to consider all of these factors when looking to find solutions to expand the ability to potentially get title insurance on some of these properties. Next slide. So, property tax reforms are a key aspect of being able to help return properties to productive use. Okay. In all systems, we should have a comprehensive title search and constitutionally adequate notice. Judicial supervision of a tax foreclosure process is a key part or aspect of a tax foreclosure system that can help to ensure that there's insurable title at the end. And being able to focus on selling the dirt and not the debt. That's a phrase that we use at Community Progress. There are lots of different ways of doing property tax foreclosure throughout the country, or delinquent property tax enforcement. Some states authorize the sale of a tax lien or a tax certificate early on in the process, and then after a period of time, usually called the redemption period, that redemption period will expire. And then there is usually some kind of a sale or a transfer of the property, either to the person who bought the certificate or through some kind of an auction. Other states don't do the sale of tax certificates, and they just give owners all the time they need to sort of pay all the back taxes. That can be anywhere from 2 to 5 years, sometimes even a little bit more in different states. And then at the conclusion of that time, they have a final sale of the property. Hopefully it's some sort of judicially supervised foreclosure and then a sale and auction, like a sheriff's sale. And that's what we mean by selling the dirt. Selling the lien or the certificate would be selling the debt, waiting and just cutting that out and doing the end selling the dirt. So usually when you're just transferring just the title to the property at the end, that's what we mean when we say selling the dirt. So when we talk about those systems and we talk about a better design system, right? Those systems hopefully require and have the type of supervision that makes sure that the notice that goes through that system are really meeting those constitutional standards that have been established in United States Supreme Court law, right? It also, well-designed systems are trusted. They're consistent, right? Judicial oversight can help with that system sort of going forward. So that's kind of what we mean by a little bit more of a well-designed system. Now, I'm still talking about tax foreclosure. Jeremy, next slide, please. In the past, we wanted to know, in order to get that good notice to do everything, there was really not a lot of other federal oversight that would go onto it until May of 2023, when the Supreme Court weighed in again into the property tax foreclosure system. And there was a Supreme Court case called Tyler versus Hennepin County, right? And I won't go into the details of it. We have a whole lot of webinars and other information about what that case actually meant for tax foreclosure. But it was a property, it was a condo, it was 5 years delinquent. By the end of that 5 years, the former owner, an elderly woman, had moved out. She was gone. She had about $15,000 in tax debt. The county in Minnesota, it was Hennepin County, where Minneapolis is located, they foreclosed on the property, and they held title to that property for about 15 months or so, and then they auctioned off the property. County didn't want to hold title to it. It's not its normal practice. It typically does some sort of an auction. The condo sold for about $40,000. At the end of that process, as was typically the case and as state law allowed, the county just kept the proceeds from the sale. Ms. Tyler ended up suing, saying, you owe me the difference. You can't collect more than that $15,000. And so you owe me $25,000. Or whatever the surplus was in the property. And the Supreme Court agreed in a 9-0 decision. Yes, our current Supreme Court had a 9-0 decision. And the ruling was that governments must return those excess sale proceeds to former owners. So there were about a dozen states that had been had systems in place that said you lose your property, eventually we'll sell it or decide what to do with it, but they didn't have a mechanism to return those former proceeds. And so a number of states over the last couple of years have needed to reform their state laws, which has been really interesting because organizations like ours and others, it gives them the chance, these states, to actually open up their statutes and say, okay, well, how are we designing these systems? Especially as we're looking at vacant and abandoned properties, are we giving the right notice? Are we giving the right level of notice? What is the title that is transferred to a new owner at the end of this process, right? And so, Jeremy, next slide. So our point was, as folks kind of start to look at the property tax foreclosure process, right? And this, again, is that main pipeline of inventory for land banks, right? We want folks to be thinking about reform in terms of, let's keep people in their homes, right? Let's absolutely do everything that's necessary. If we have to go forward with a tax foreclosure auction, we certainly want to make sure people have a right to any excess proceeds that the law says that they're allowed to, right? But we also need a system and a group of partners to be able to address the vacant and abandoned and deteriorated properties next door, right? Because so often that's where that inventory of properties goes. They go through this system and go through this pipeline, and then they get stuck in it. And so while we're thinking about reform of our property tax foreclosure systems, and again, when we're thinking about reform, we're not thinking about reform that applies universally. It's reform because it looks different in every single state. And as many of you on this call, I'm sure, are well aware, right? There are 50 states with 50 different state laws, and even jurisdictions within those 50 states that have different requirements and choose different schemes for property tax foreclosure in their own communities, right? So it's complicated, and it takes a lot of work to understand it. But universally, we shouldn't look at this system as a tool that keeps these vacant and abandoned properties, which the longer they sit, the more harm they cause. we want to be able to move them through this process. All right, next slide. Okay, so I talked just a little bit about this, helping property owners avoid tax foreclosure. We can improve really helping people keep these home equity things if we do a number of different things, right? Fair and accurate assessments, make sure the tax exemptions are right, allowing heirs living in the subject property to qualify for exemptions, circuit breakers, payment plans, those kinds of things. Next slide. And this is sort of, as we've been thinking about it, and as I said, what does an optimal system look like? There's a tool that we've been calling judicial in rem tax foreclosure, which is saying sort of when properly designed, an optimal mechanism to foreclose on the tax lien for bad property and transfer it to a new owner, right? Which may or may not be a land bank, which we'll talk about, is one that is supervised by the court, one where the foreclosure is and the liability exists against the property, so in rem, not necessarily the owner, where mailed notice is sent to the owner and all interested parties that meets the minimum standards, right, for due process required by the United States and state constitutions. And it ultimately results in a sale or transfer of title that could be insured, or that a title insurer hopefully would feel comfortable with insuring, right? I do want to acknowledge, however, that there's a number of reasons. My colleague Libby Denton, who has recently left the organization to take a new and wonderful job, did some surveys and some work with some of reaching out to different title insurers in different states. And one of the things that she noticed is that a lot of underwriters that she spoke to are reluctant to insure tax foreclosed properties, right? And with good reason. The benefits don't often always outweigh those costs and risks, right? Tax foreclosed properties tend to have low value. So the premiums that underwriters could collect for issuing policies is low. From a cost perspective, it also costs more in a lot of cases to conduct title searches on foreclosed properties. And the tax foreclosure process could increase the risk of a title defect, which underwriters would have to defend against. So as we talk about these address the VAD judicial in rem tax foreclosure system for tax foreclosure, it's just, we recognize that those concerns exist and are super valid, and think that some of these aspects of a tax foreclosure system make some sense to be able to do that. Now, I do also want to say that as we're talking about reform, and as Jeremy mentioned with some of our work in Missouri, and work we try to encourage folks to do anywhere whenever we're touching the delinquent tax enforcement system, is to bring in title insurers into the process, right? And to involve them in the conversations about reforming these statutes. Because if it is in everybody's best interest is if we're getting that part right and we're listening to those concerns so that we have one opportunity to put this property through this this property tax foreclosure system. And then on the other side of that, we have a piece of property that hopefully is insurable, marketable, right? We can get it back out into the private market or into somebody's hands that's going to do something productive and helpful to the community. So at the bottom here, we have some examples of some states where there are some good statutes to take a look at. New York, Georgia has an in rem judicial foreclosure statute that we look at a lot. Ohio, Wisconsin, Michigan, and others are out there. Next slide.
Looks like we have our first poll question here. We just wanted to get a little color as far as all the attendees, if you have legislation in your state that allows for land banks. So if you don't mind, we'll keep this open for 10 seconds or so. Matt, looks like it's about, shrinking. It's about 50, it's coming down to 50-50, yes and no.
No problem.
So if you want to vote, go ahead and get it in. We'll go ahead and close it now. 55% said yes, they do, and 45 no, they do not have legislation that allows land banks.
Great. Well, that's incredibly helpful and helps to set the stage for what a land bank is. First, I'm going to tell you all about all the different kinds of land banks that exist out there, right? And where they exist, and then I'm going to get into the nitty-gritty of sort of how they work, right? So we've got this tax foreclosure system, and we've got this tax foreclosure system where a lot of these vacant and abandoned and deteriorated properties go to. Well, a land bank is a quasi-governmental entity that exists almost entirely to really help to address that inventory of properties, right? And I'll get to the details of that in a second, but just for your information, there are over 300 of these, right? 80% of them have actually been established since 2008, right, since the mortgage foreclosure crisis. Back then, obviously, there was a huge inventory of properties making its way through these systems. Most land banks exist pursuant to some state enabling legislation. There are specific tools that land banks really need to be able to operate successfully, and I'll get into what those are. Michigan, Ohio, New York, Pennsylvania, and Georgia have the most land banks in their states, but that does not mean they don't exist everywhere, right? And they even exist, in many cases, in states that don't have state enabling legislation. And I'll get to what that looks like in just a minute as well. But back to this earlier point and why I spent some time on the tax foreclosure system at the beginning, 90% of the properties held in land bank inventories are acquired through the tax foreclosure process, right? So that makes it just really, really important to be thinking through. Next slide. So what do land banks do? They can help address those properties. Now, Tyler versus Hennepin, actually the case that I just talked about earlier that we were talking about using as an opportunity for reform, it also created some additional barriers that some land banks in some states, like Michigan and New York and others, have to think through as they're designing how they work, right? Because what Tyler versus Hennepin said is, you need to have a system in place to make sure that if there is excess value in that property or there are excess proceeds from a sale, that those go back to the former owner of the property, right? And in some cases, land banks were using different rights and authorities to be able to pull properties, vacant and abandoned property, not occupied usually, out of the tax foreclosure system to be able to pull them down in their inventory and do some really cool things with them, which I'll talk about in just a moment. Essentially, what Tyler versus Hennepin sort of requires is that at some point, a land bank needs to do some kind of a assessment of what the value is. So if the property is going through the tax foreclosure system, there needs to be at some point some kind of an assessment of, is there going to be some kind of an excess value or proceeds that might result from this property? And if so, what's that amount? And how do I get it back to that former owner? And what most states do is they have a judicial auction in order to do that. They offer the property at the end of the tax foreclosure process up for a judicial auction. And that minimum bid is usually the amount of all the taxes, interest, and fees, and maybe housing and building code enforcement liens that are owed, right? And the highest bidder gets the property, right? If there is any over that minimum amount, that is the excess proceeds, and that can go back to the former owner. Now, even in today's market, and it obviously in many, many places all over, property values in the last 8 years or so have just skyrocketed, right? However, there are still properties that are going through this tax foreclosure system. They are offered at auction and they aren't getting bids. That is the inventory of properties where a land bank has a sweet spot, right? So they really focus on, in many cases, addressing those properties that don't sell at auction. Now, they can do a lot of other things as well, and I'll talk about that. But that's really where a lot of the tax inventory properties come from. Now, as I mentioned, they're public agencies. They're often created by state law. Now, they need those state laws to be able to do things like acquiring those tax delinquent properties from that property tax system. So many state land bank legislations tie the land bank operations, their ability to interact with the tax foreclosure system. And a land bank can submit a bid for a property. And if there is no other bid, in the absence of another bid, a land bank might have the power authority, if that the power exists in state law, to be able to draw that property down then immediately into their inventory. Now, if there's a higher market bidder who bids more than that, they can. Land banks can also compete at the private market. They may just be able to have enough cash, and they may be able to do that. They may be able to go back out and compete with private bidders. They're often bidding on credit, right? Again, another statutory authority. And that means that all of the taxing entities that are owed money from the back taxes that cause that property to be subjected to the tax foreclosure sale, right? In the land banking law, if the county or the jurisdiction creates a land bank, they can say, hey, in recognition of the fact that you are going to take this vacant and abandoned property and hopefully get it back to private market, you don't have to pay the back taxes, right? You'll bid on credit. And you're basically representing our interests. We're not going to have you, land bank, pay us our back taxes. You're performing a public good. You're a governmental entity, and that's where the credit bid can be. So that's another thing land banks can do. Land banks are also, once they get that property into their inventory, are a lot more flexible in what they can do, right? They don't have to necessarily go to city council every time they want to sell a piece of property. They don't have to sell a piece of property for the highest price that is offered. They can consider what the end use will be. So if affordability is really a key issue in that jurisdiction, a land bank, provided state law allows for it, can offer that property for sale and can consider an offer from an affordable housing developer that may be lower in terms of dollars, but in terms of consideration, total consideration, and the fact that this person is able to provide affordable housing, something that may be desperately needed in that arena, they can consider that in terms of the terms. Most local governments can't always do that, or at least there are an awful lot of hurdles in the way that they might be able to do that. So those are some of the ways in which land banks can exercise some of that flexibility. I mentioned also land banks don't have to acquire properties at property tax auction. A lot of land banks acquire properties by donation from folks who just don't want the liabilities on there or need help with clearing the liabilities. A lot of land banks can purchase the properties on the open market if they need to. And in some higher market areas, they may be looking at doing that and then banking that land for future use. Land banks are also really key. Now, we want to get properties through the system, as I mentioned earlier, through a tax foreclosure system to have clean title on the opposite side. But a lot of land banks may actually step in and be able to help to figure out how to, or have the expertise, or have special ability to conduct a bulk quiet title action or an expedited quiet title action, just different tools that they may be able to do to be able to try to conserve resources and file these quiet title actions so they can get clear title at the end of it, and then offer it back out to the property with title that hopefully folks are going to be willing to insure and things like that. Land banks also, because they're touching land, it is so important that they recognize that in many communities, there's just a history, right, of government or quasi-government or whatever you want, holding land and holding entity that used to be somebody's home, right, or used to be somebody's livelihood, right? And so there's always a sensitivity around that. And so land banks must involve themselves in understanding, what does the community really need? How is the community involved in decision-making around our priorities and what we think is best? And then land banks don't necessarily do everything. I mean, they're focused on getting these vacant and abandoned properties and trying to get them to a place where they've got title figured out. Hopefully it's not causing harm anymore to the community by virtue of being open or other things. Sometimes land banks get involved in demolition. But in order to truly reactivate that property, in order to truly think about it, and land bank has to be responsible to be working with a network of local partners, developers, contractors, others, both within the city and government and within the community. All right. Land banks typically aren't doing development themselves, although some are. And there are examples of land banks doing more development work throughout, or at least exploring how to work more closely with developers in their community, in Cuyahoga County, the South Suburban Land Bank and Development Authority in Illinois, Tricog Land Bank in Pennsylvania, Greater Syracuse Land Bank up in New York, Albany Land Bank, County Land Bank up in New York. There are land banks all over that are exploring that, but often they just need to work with other partners. So land banks are also really good conveners, or can be really good conveners, and bringing a whole lot of partners to the table to say, hey, this land, it's been stuck. We're going to do everything we can to unstick it, but we need you to help us create the vision, right, and the opportunities to be able to reactivate or rebuild on it and to figure out what our best options really are. I do want to note here that in 2023, our National Land Bank Network at the Center for Community Progress conducted a survey of land banks. And interestingly, 83 land banks responded to the question and 41% reported that private title insurance companies will not issue policies on properties that they've acquired that they got through the property tax foreclosure procedure. And 59% reported that they've had either a local or another title insurance company that would. I just thought that was interesting. And again, a lot of that goes back to those properties that come through the property tax foreclosure procedure. But it's something to keep in mind and to ask those questions about, if you're working with a land bank, how are they doing all these things? How are they interacting with the property tax foreclosure system? How is that working? What are they doing maybe to sort of help clear the title? Is that enough for title insurers to be able to be comfortable insuring policies going forward on that? Next slide.
Yeah, real quick.
Yes.
Two quick things. One, I was going to ask everyone on the call, if they don't mind posting in the comments, the chat box, what are some of the top issues you've experienced, when you're handling these types of transactions? I'd be curious to hear what y'all have, just to kind of maybe follow up on the survey, stats that Matt just shared. And also, Matt, where do land banks get their funding to acquire these properties? Is it baked into legislation, or is that in a slide that I haven't looked at yet?
Well, Jeremy, I'm going to say next, and that's what we're going to get to.
There we go. All right.
Look at that, right there. So I hope you all can read this. It's a graphic from one of our good wonderful resources out there on land banking, and I've included links to some of those resources at the end of this. But where do land banks get their funding? It's all over, right? Some land banks were created with the idea that they would be self-funding or self-sustaining, that sales of the properties that they would bring into their inventory would be able to sustain their operations. And I'm here to tell you that unfortunately most often is not the case. Obviously, market matters. But in those really high performing markets, as you can imagine, there aren't a whole lot of vacant, abandoned, tax delinquent properties sitting around. So I think that there are a lot of different ways, but what they are is they need a recognition from the state, local county, and local governments that these land banks are basically fulfilling a service that nobody else is. Right? These are properties that the market essentially has rejected in many ways. And so that funding, there needs to be real funding to be able to do the hard work of fixing these things up, clearing off the title, and doing all of those things. So as you can see from here, a lot of their money comes straight from government grants and or appropriations, local government appropriation from the general fund, for example. About a third of land bank revenue comes from real estate revenue. Some of it also comes from those ties to the delinquent tax enforcement system. In many state legislations, there are little funding mechanisms that allow for a land bank to collect, for example, up to 50% of the property taxes that are collected for 5 years following the day the land bank sells it to a new owner, right? And that's in recognition of the value that the land bank has done in getting that property back onto the tax roll, getting into the hands of a new owner, right? Foundation grants are sometimes helpful, in-kind, other donations, things like that. In some cases, helping land banks with funding can be simplified by just simply allowing the local government or the county or redevelopment authority to share their office space, right? To even share part-time personnel to be able to help out and do stuff. So it's a big pie puzzle here to try to figure it out. But the fact of the matter is, there are very few places where the properties themselves generate the sufficient revenue to be able to fund the land bank in and of itself. And that's just given the nature of these properties and things like that. So it's tricky. There are statutory ways to do it. Some of the best and most well-funded land banks are in Ohio, where county treasurers in Ohio have agreed to carve out some of the amounts of interest and penalties that are collected for all properties that are tax delinquent, and set those monies aside for land banks in Ohio. And coincidentally, you see land banks in Ohio who have sufficient funding to be able to tackle some really big, really exciting things that are out there. So I hope that answered some of the questions around funding.
Yeah, definitely.
They're all out there.
Yeah.
Great. Next slide. So I'm just going to give a couple of examples for those of you that aren't super familiar with land banks, right? What are some of the benefits that you can get? And I want to just stress that we're only able to cover a little bit on this 1 hour webinar, right? We can touch on the importance of, the harm that vacant and abandoned and really tax delinquent properties can cause to communities, which I think most of you already know very well, given you're all very deeply involved in real estate, right? We know that a lot of the inventory are tax delinquent properties, and that there are things about those systems in different states that really keep it stuck. And we know that land banks can be a very good tool to help resolve some of those issues. In addition to property tax reform, and land banks can step in, they can be title experts, they can do all kinds of wonderful things to help it out. When they can do all of those things, when you've got those systems working together, right? And there's other systems that are really a helpful piece of the puzzle too. Housing and building code enforcement, where do they fit in, right? That comes in early in the process too. That's an important piece of this. But what can they do when they get all of these things? When they're able to get property, make sure that the title is to a point where it can be, where a title insurer is going to be comfortable insuring it, right? It opens up opportunities. It opens up financing opportunities, right? It opens up development opportunities, all kinds of different things. And so, I'm going to talk just a minute. New York land banks, they've done some reports and studies, and we've worked very closely with the New York Land Bank Association. They did some calculations to find out that of all of the various, dozens of land banks that operate throughout New York, they've returned roughly $135 million in assessed value to the tax rolls. And most of these were properties that are just sitting there, right? For many cases for years, right? So those numbers, particularly when you look at them statewide, they're pretty big. If you can unlock those things, there are the opportunities to be able to put these things back onto the tax roll, and it's really powerful. Next. Increasing sales prices, right? Detroit Land Bank. At one point in time, the Detroit Land Bank, it is still the largest land bank in the country, right? And they had a huge issue. And for a long time, the Detroit Land Bank was the repository for all properties that went through the delinquent property tax enforcement process. At one point in time, there was just over 400,000 total parcels in the city of Detroit, and the land bank owned over 100,000 of those, right? So about a quarter of the land in Detroit. Now, we all know a lot of the things that Detroit has struggled with, but they've also done some incredible things there. And the land bank itself has been a key part of a lot of that work there. This is also from our land bank publication, authored by our senior fellow, Kim Graziani. The median sales price increased 11.5%. The mortgage rate increased 5.6% per year, where the Detroit Land Bank renovated homes through one of its programs called Rehabbed and Ready, right? Working with local developers, trying to get those local developers, these properties into the hands of local developers, and getting these properties out the door. And they've done some amazing work there. But these investments tend to increase those values that are so important for us to find. Next slide. Reducing crime. Saginaw County, also in Michigan, removed 884 vacant and blighted homes, right? And I know that not all markets want that. They don't want more vacant lots necessarily. Saginaw County Land Bank also has done a ton of work with a lot of other local partners there to do a lot of green infrastructure, a lot of greening in those lots. In some markets, there just isn't a reuse for some of those properties and some of those lands. But there are uses, and there are uses that are far more productive than a dilapidated home. Study in Saginaw showed that major crime was reduced by almost 20% after the removal of these homes. There are similar studies out of Philadelphia that show how cleaning and greening vacant lots can help to reduce violent crime, the incidences of violent crime in certain neighborhoods as well. So these interventions are, not just to develop new homes, but also for public safety reasons, and to beautify the area as well. Next slide. And then I mentioned Ohio. Ohio land banks have really become a central cog of helping to deal with not just vacant and abandoned properties, but getting all these properties back into action on a lot of different things. And one area where you'll probably hear a lot of other work coming up on is land bank's ability to help out with brownfields, right? So yes, we've got title issues, but in many cases, some of these properties have real environmental concerns. They are brownfields and are therefore really hard to deal with. both for municipalities and for developers and for others. And so Ohio, the state, has actually provided a great deal of funding for brownfield redevelopment and using land banks to help carry out this work. The brownfield remediation in Ohio awarded almost $475 million in grants to 426 projects throughout those counties in Ohio, and land banks were eligible for that funding. The land bank must serve as the lead entity on almost all those applications and grant awards. And they've got into that position because of their ability to responsibly steward so many of these properties, right? The partnership of a land bank was also really important because it provides liability protections for some state environmental laws. So if any of you have been involved in the development or work with brownfields, right, you'll obviously know that a reason why people are nervous about it is because of that ongoing liability. Land banks, particularly when they're created in a state enabling legislation, right? Often that state enabling legislation can point to and give them some sort of protection from many state environmental laws that are really important. My team at Community Progress has done some great work. Again, my colleague Libby, my colleague Nora, others folks have done some really fantastic work on what land banks and brownfields have done, and there's some resources available on our website for that as well. And so I think, Jeremy, next slide. Next slide.
Did it go?
Is that it?
Return. Oh, wait, did I go the wrong? Oh.
Yeah, next slide. There we go. All right. So I think, Jeremy, you wanted to ask this poll question.
Yeah, one more poll question here. Just wanted to see, if you do have a land bank in your area, if you've closed a transaction involving a land bank. And as people are answering the question, you just wanted to share some thoughts that people have been submitting. And Matt, you'd mentioned Cuyahoga County, and Marty shared some thoughts. He's working on a land bank parcel right now for an affordable housing project to be transferred to the Cleveland Land Bank. That will then go into an affordable housing developer. One parcel had an incomplete legal description in the tax foreclosure insurance deed, and will need to do a quiet title to insure it. So, anyone on here, he's curious if anyone has experience with quiet title in Cuyahoga County or Cleveland Land Banks. So, I don't know, Marty, if you want to share your contact information, maybe we can, put you in touch with someone who has experience with that, or Matt, maybe you have, contact as well.
Yeah, I'd be happy to share a contact out there. I know that there's a lawyer out there who's general counsel for the statewide association, as well as has done some work with all the different land banks in Cuyahoga County. So if you want to reach out to me personally, I'd be happy to connect you. Okay.
All right, Marty, I'll follow up and we'll get you Matt's contact information. And then, I'd ask for like some of the issues people are facing when handling, these types of transactions. A lot of it is proper notice. So is that what you see a lot? Yeah.
I'm sorry, was that a question?
Yeah, I mean, yes, that's something you see, Matt, as well. Just people, there's a proper notice and that you have to go and then quiet title.
I mean, I'm talking to a room full of folks who I would assume have strong opinions on that. But yeah, I think that's what we see. That's what we've seen in our interviews, our transactions. That's where the concern comes in. Is if you provide the notice and you do it right, you minimize the need for that future, the ability to have to defend against a future claim. So that really is the crux of making sure that these systems work, is getting that notice right, finding folks, right? Obviously, it becomes a lot more complicated when you got a vacant and abandoned property where the owner passed away 40 years ago and you've got heirs split all over the country and it's really hard to find them. I think folks know full well how to do that, or how problematic that can be in terms of making sure we get everything cleared up, get the notice out. And local governments like counties or land banks that are filing quiet title actions, they struggle with those just the exact same. And so I think there needs to be more conversations to continue to try to figure out how they can do that right, so that hopefully it doesn't have to be done again in a separate action that gets expensive and can take forever.
Yeah, let me close the poll, and
Mhm.
19% of people on the call have, closed a transaction, involving a land bank property. So a majority have not. So, I think, Matt, you're providing
Mhm.
some great information, for, people who may have an order for this come in the door. Another quick question, and we can get
Sure.
to the home stretch of the presentation.
Oh, we're there.
Very good observation by Tom about, the Rust Belt, Ohio, Michigan, Pennsylvania,
Mhm.
New York. Why is this the primary part of the United States where land banks have evolved?
Mm. I mean, I think it has to do in part just given, and again, I wouldn't consider myself the nation's foremost housing expert. I wish I had my colleague Alan Malik here with me to talk a little bit more about it. I think it's just the nature of the housing that was built, the type of housing that was built, the density within a lot of these cities, and then some of the market realities that really sort of exacerbated these issues throughout the years. It's industry, right? It's all of the issues that about those communities that have a whole lot of inventory, right? In Pittsburgh, it's the closure of some of the steel mills, right? And the loss of some of those jobs. It's in more rural areas in Georgia or elsewhere. It's the closure of larger manufacturing plants and the movement of some of those jobs overseas, or for whatever reason, change happens. And there's just been a lot of it in those areas, a lot of different shifts, a lot of economic shifts, and those have impacted ability of people to do it. So I think in Michigan, Pennsylvania, Ohio, you've just seen a lot of industry and jobs move around that depressed some of those markets. Some of that inventory needed that kind of regular upkeep. And as jobs and financial opportunities went down, the ability to do that upkeep went down. So again, that's my best answer, but there's a lot of theories out there.
Well, being from Ohio and, obviously seeing a lot of, factories and closures in Northeast Ohio, I think definitely, feeds into, exactly what you just said.
Yeah. So as far as the poll goes, I don't really have a whole lot of other content. What I wanted to just show you all was give you an introduction, maybe start the things, your brain's flowing a little bit. Like, are there more opportunities to think about? Does my jurisdiction have a land bank? And are there opportunities where I could be working with this land bank, looking at, some transactions involving a land bank or not, right? Does my jurisdiction not have a land bank? Do we need one? Right? Because one of the things that we go into places all the time and people are like, hey, we think we need a land bank. And we look at it and we look at a number of factors, right? It's not just one thing, but like, well, you don't really have an inventory of vacant and abandoned properties. In which case, do you really need to do the brain damage of creating a whole new statutory entity to be able to handle a problem that isn't really all that big? Or can we do some of these things that we talked about within existing departments? Can we, sort of streamline those key functions, if you will? And we've got a lot of resources on our website, I think. So if you're curious about anything that I talked about today, a couple of the tax resources are on the left there. We typically mention land banks in all of them. And then a really good publication, again, I mentioned my colleague Kim Graziani did this, The Road Ahead for Land Banks. That was written a couple of years ago. It's a really solid publication that if you want to learn a little bit more about some of the details and I can't talk today, guys. I apologize. The intricacies of land banks, this is a great publication. It also contains a whole lot of cool success stories. Each of the ones that you saw about with some of those numbers that were in this presentation, you can find more detail about there. And that's it. If you want to reach out to me, there's my email. Yes, I hope that if you have any questions or you have some ideas or some things that you think should be considered going forward, I hope that this spurs your thinking a little bit, and would love to find more opportunities to figure out how these kinds of entities and tools can better work together and work together with title insurers as well to really kind of get these properties back into more productive spaces and really help our communities thrive.
Yeah, exactly. Help communities thrive and help with the affordable housing issue that has been discussed for the past few years. Matt, thanks for the informative presentation. As I mentioned earlier, we do have a few minutes. If you have any other questions you want me to pitch over to Matt, submit them in the questions box. I did post information in the chat box about how to get information to us so you can get CE and CLE credit. And as a reminder, if you missed parts of today's webinar, if you think others in your office would benefit from listening, the recording of the presentation will be available at alta.org/webinars, and you'll also get an email tomorrow with a link to the recording. Do have quite a few questions popping in. I'll try and kind of maybe summarize a few of them. Interesting question from Stephen. His question is with more smart cities coming in the near future and old infrastructure being abandoned, most likely, do you feel land banks will be more in demand?
Well, Steve, you just asked an existential question that we ask all the time. The short of it is I wish I was better at being able to predict where I think the market in and of itself is going. I think that cities are getting so much smarter about their data, right? And how they are leveraging that data and how they're leveraging other publicly available information to be able to understand and predict where properties are vacant, where they're abandoned. And so I don't know. I think that there's also an effort to try to do more preservation work, right? As housing costs, construction costs, everything skyrockets, right? And I know that we're seeing some changes in some places, but still things are so high. I think that one of the things that we're hearing a lot more is a lot of focus on preservation, right? And investing efforts into trying to keep people in their homes, doing rehab work, things like that. And there are a lot of land banks that are real nimble. Their ability to understand how to hold and responsibly manage land is a real incredible asset. Their network of partners, both at the public level, at the local government, at the county level, their network of partners that are developers, other folks like that, are incredibly and increasingly valuable in terms of figuring out how to navigate, all right, like, how can we do this? Like, we can get a handle on, maybe it's a few less properties, but land banks are a really important part of helping to figure out how they can be a part of, bringing those skill sets into helping develop and expand in a responsible way, I think. Some of the desire for growth. So I don't know if there's going to be as much vacancy and abandonment. I can't answer that question. We'll see where the market goes in a couple of years.
Yeah, right. You don't have a crystal ball for that, but definitely,
I do know.
Yeah. We are kind of getting top of the hour. If you don't mind, Matt, maybe one or two, quick questions.
Sure.
At the top of the presentation, you talked about quasi-government land banks. So
Yes.
Daniel asked, how do you differentiate between those quasi-government land banks and land banks that are often utilized by builders and developers? He said that sometimes it can get a little confusing.
It's an excellent question. When I use the word quasi-governmental, and I know that my former law professors and current colleagues are going to be like, oh no, I'm not sure I would say it the same way. But I would generally say it's a quasi-governmental. First of all, land banks aren't taxing authorities, right? They're a separate statutorily created entity in many states. And that's how I would sort of differentiate it. They are created by the local government or the counties that made them. And so they have this sort of governmental, and they're imbued with these powers that are governmental. The other types of land banks that you're talking about don't need any other powers. They just get land and they bring it in and they bank it for a specific purpose of other things like that, right? So I think it's those special powers and the statutory creation that really differentiate the two.
Okay. All right. Thanks for that clarification. And then maybe just one more to wrap it up. And maybe I missed it when you were talking about the different types of properties. But Anita asked, if zombie properties are also available to go to land banks.
Yes. And in New York, there's a whole zombie property law. I'm assuming when we say zombie property, we mean properties that are in some kind of mortgage foreclosure limbo or REO.
And the owners just walked away. Yeah. Mm-hmm. I'm
Right.
guessing
Yeah.
Well.
I mean, yes. Now there's the mortgage debt.
That's what she's talking. She's talking. That's what she's.
Yeah.
Exactly.
Yes. And land banks absolutely can. But remember, typically, if they're not paying, if the mortgage isn't being paid, it depends. If the mortgage company is paying the taxes, then a lot of the local government leverage mitigates the need necessarily for a land bank. But land banks absolutely have partnered with REO groups and other folks that own large inventories of land and things like that. So I think the answer is yes, but it's a little bit different in that the mortgage company has to kind of play a role there. But if they've abandoned, they've walked away, the mortgage company has walked away, that is absolutely an area where a land bank can be potentially helpful.
All right, very good. Well, thank you, Matt. I've had a lot of great comments. Just appreciating your time. Real eye opener. I wish our state of Illinois would use land banks. From Annie, a couple others that have been in the industry handling commercial properties and might be in a state that don't have land banks and never been exposed to the topic. So definitely here at Alta, what we want to try and do is provide information to all the title professionals out there and help you do better work in your communities. Matt, again, thanks for relaying this information to our members.
Thank you.
Again, just a reminder, the link for your CE/CLE credits in the chat box. You'll need to log into the Alta website to enter your information. If you do have any questions about the education credit, send an email to education@alta.org. I'd like to thank Close Simple once again for sponsoring today's webinar. And with that will bring us to the conclusion of today's presentation. Take care, everyone.
Thank you all so much. Really appreciate it. Have a great rest of your summer.
Yep, thank you, Matt. Enjoy Upper Michigan.
Will do.